Okay. That's good. No camera. Timeout. Well, we're going to go to this then. All right, guys. That's good. No camera. I don't know what's happening, but I guess it doesn't matter as long as you can hear me. Well, let's see. So we have everything that happened over the weekend with Warren Buffett and the Charlie Munger and the Mondays is right, man. I don't know. We had on Friday, we had the computer just crashing in the middle of the show. Right now, I could see myself perfectly fine. I mean, whatever. All right, let me just get rid of this thing right here. Okay, there we go. So you're going to see my screen today. You're not going to see me. And sorry, Susie's back. So, of course, we had Berkshire Hathaway annual meeting over the weekend. You know what? After reading about everything that I've seen with how do I say this? I look at Warren Buffett and I think, yeah, Warren Buffett, greatest of all time, this and that. Then you really read what he says and what he's saying nowadays even at this capacity. I mean, he's old. Charlie Munger, I think he's in his mid 90s or something like that. These guys are seriously brilliant. I was going through these articles reading and I'm like, man, this guy he really knows what he's talking about. So I have 3 articles here. One is going to be that it's just kind of a general overview. Then we're going to look at what he said about SPACs. Then we're going to look at what he said about interest rates. And then I'm going to start digging into a little bit of gold stuff. And then we'll just get into random stuff that you guys want to talk about. So I highlighted quite a few stuff in here. Warren Buffett makes a case for doing what he says, not what he does, morning brief. And everything that he said in here really correlated to a lot of what we said or what we do say on our shows. Well, you'll see. So here we go. Warren Buffett. I recommend the S&P 500 index for people, for long-term investors. And that's what we preach. We say, go ahead and get into these S&P funds or Vanguard funds and go and do your thing and invest over time. And you're going to do very well over time. That's just how things work. And he has never recommended Berkshire Hathaway to anybody because he doesn't want people to think that he's tipping them off to something. Now, I look at it and say, it's the same thing. We say, don't go and do all the stock picks that we do. Don't go and do what we say as far as sitting in as much cash as we do and whatnot. He's really saying the exact same thing. Go and invest in your S&P funds, and you will do very well over a long period of time. Let's go further. Buffett acknowledged poorly timed trade. So one of the big things that I noticed that they talked about, I don't know if it was in this article or another one that I read, but they said that they thought it was a little bit, it was a mistake for them to exit their Apple. Oh, they didn't exit their Apple position. Take a lot of their shares off of their Apple position. I think they owned at some point 5% of Apple, and they reduced. I think they sold $120 billion. My numbers may be wrong, so correct me if I'm wrong. But they did exit a lot of their Apple position for substantial gains for their shareholders. But they were happy that Apple was buying back their shares and rewarding their shareholders. So let's see. Warren Buffett, he went into detail about the airlines. Airlines may have actually benefited from Berkshire's sale as it potentially accelerated financial support from the government. I mean, the Berkshire Hathaway was highly invested in the airlines, and maybe the fact that they did pull a lot of their investments out of there, and frankly, for good reason. I mean, but Warren still said that they wouldn't invest in the airline business, and I do agree with him. We look at what's happening with travel. Planes are not at full capacities yet, and even if they are at full, even if individual planes are at full capacity, it is because they've canceled so many other flights. They're just trying to stick people back on. They're trying to pack planes instead of flying multiple planes. So we are definitely seeing an increase in airports and whatnot. But you guys saw the earnings that came out was it last week or 2 weeks ago? And it's not good out there for the airlines. They're still losing money. Southwest Airlines had their first annual loss ever in 2020, which is no surprise. But United is still in terrible shape. Delta's doing okay. I mean, relatively speaking. I do believe Southwest is still the best one, but Southwest, these airlines are overpriced if you are trying to get your good returns over a long period of time as of 10% or higher. So going back to 2020, looking back, it would have been a better buying opportunity. Buffett admitted, "I do not consider it a great moment in Berkshire's history, but also we've got more net worth than any company in the United States under accounting principles." So I look at that saying that even in times of chaos and everyone's doing the thing where everybody's just going and buying, everybody's saying wrong. They stick to their principles just like they do. They stick to their process and they don't deviate. And this is why these two are considered the best investors of all time, because they do not deviate from their process. No matter what the media is saying, no matter what the markets are saying, they stick to what they know, and they do very, very well over very long periods of time. What about the Jets ETF? I was invested in the Jets ETF back when all of this started in March of last year, and it has gone up so much. I have since exited the position just because it was a safer route, but when we start looking at these ETFs just soaring, you have the Home Builders ETF up 122% as of last Thursday, I believe, over the last 52 weeks. You have, all of these ETFs are just doubling. This is not what ETFs are supposed to do. Also, markets aren't supposed to double in a year. So I guess they're just following along with the market. Guys, smash the like button for me. And I want to get into this. This is a great argument that he made in index funds. This is kind of where I saw I was like, man, this guy still got it. So prior to the Q&A, I don't know if any of you guys watched this thing over the weekend, but it was pretty good. Buffett shared 2 slides in an exercise illustrating how difficult it is to pick winners in the stock market. The first slide was the world's 20 largest companies measured by market cap as of March 31st, 2021, including Apple, Microsoft, Amazon, Google, Facebook, Tencent, and Tesla at the top. He asked the question, how many of those companies are going to be here 30 years from now? What would you guess? Think about it for yourself. Then he listed top 20 companies from 1989. None of those 20 companies from 30 years ago are present on this list. Now, there's a lot of these companies, of course, that would not be in the S&P 500 like these Japanese ones, but investing it's really all the same. It doesn't matter what country you're coming from. None of these 20 companies are here from 30 years ago. It's a reminder of what extraordinary things are going to happen. We are just as sure of ourselves as investors as Wall Street was in 1989 as we are today. Guys, it ain't different this time. That's basically what he's saying. It's not different this time. It's a great and this is his great argument for index funds, and this is why we tell you guys get into index funds. They're made for protecting safety. For protecting you from risk, and that's exactly what they're made to do. They shift around this and that, but this is truly incredible. None of the 20 from a year ago are around. It's just truly incredible. I do see a couple on here. I don't know. Just remarkable. So, let's see. Of course, you remember 2009. There were so there's a lot more to picking stocks and figure out what's going to be a wonderful industry in the future. That line right there just reminded me of saying when we talk about the EV market and this and that. The industry is going to be great going into the future. Well, I could tell you that just proof from that little one or two slides that he put up that it's going to be. You can't just say that the industry is great and everything's going to be hunky-dory. It just doesn't work that way. That's it. So this is a great article. This is from Yahoo Finance. If you go to Yahoo Finance today, it's just Sam wrote this. The whole thing is pretty much all of Yahoo Finance right now is all Warren Buffett. So let's go to, I want to talk about the SPAC thing first. What's a good index fund? Just start going through. I'm telling you guys, I like just look at ETFs. Just look at the S&P ETFs. I mean, even though they're going crazy right now, everything's going to settle down. S&P ETFs, Vanguard ETFs. If you stick to those two, the spiders and the Vanguards, you are going to do very well over time if you do not deviate from your strategy. So let's smash the like button, guys, and we will get into what Buffett calls SPACs a killer. And we all know this. If you're watching this channel, you already know it. I'm just kind of go through it. But I'm just looking at the analytics. I think we did a video on this a couple weeks ago, and the number of SPACs at that point was in the mid 200s, and now we have 331 listed just this year. Just this year, we have 331 SPACs going this year. So this won't go on forever, the SPAC stuff, but it's where the money is now, and Wall Street goes where the money is. And it does anything that works. So SPAC's been working for a while. If you throw a name on it, it's going to work. Of course, Warren Buffett has been tossed plenty of SPAC, I'm sure. And he's said no to them just because they don't fit their business model. And again, it's the same thing as they stick to their principles. They do what they know. They're very good at what they know. And if you want to judge Warren Buffett on what he's done in the past 5 to 10 years, well, that's fine. But that's also why when people come to Paul and I and say that we should start a hedge fund, it's just not going to work, because people want to judge us based on our 5 to 10 years instead of looking at a long term of, say, 30 or 40 years. And it's just not going to work that way, because that's not what value investing is. I'm preaching to the choir with you guys because you already know this. Buffett quoted from famed economist John Keynes. And John Keynes, if you don't know, he was one of the lead most brilliant economists to come out of the 20th century. And he has his own, they call it Keynesian economics, which is his own never mind. So this is what Keynes said: speculators may do no harm as bubbles are steady on a steady stream of enterprise, but the position is serious when the enterprise becomes the bubble on a whirlpool of speculation. And it's remarkable that Keynes can say this back in the mid 20th century, early 20th century, and it's still relevant today. When the capital development of a country becomes a byproduct of the activities of a casino, the job is likely to be ill done. And that's exactly what you're seeing in today's market. It's just nonstop gambling. I mean, I love Dave Portnoy. I have a Dave Portnoy cup sitting right in front of me that says Team Portnoy on it. I love the guy, but the whole everything, this is all just gambling. And if people think that this is easy, they're sorely mistaken. It is very easy right now. I will not say that it's not, because you have stocks just keep going up, up, up. It's really incredible. So, yeah, in speculative times when everyone is flush with cash, that's everyone. I mean, hell, we're giving away cash. Investing is great until the music stops. When the music stops, guys, it's going to be ugly. You know that. The gambling impulses are very strong in people worldwide, and occasionally it gets an enormous shove. Excuse me. And conditions lead to this where most people are buying. They're leaving every day. You know what? I wonder, hold on a second. There's a picture that Paul sent me and his brother last night. I want to read this thing. Americans can't get enough of stocks. Individual investors are holding more stocks than ever before as major indexes climb to fresh highs. They are also upping the ante by borrowing to magnify their bets or increasingly buying on small dips in the market. Guys, it goes back to this. You can't say that we know we're in a bubble, this and that. It's all of these things just put together that is just signifying bubble, bubble, bubble. Eventually the bubble's going to burst. And Charlie came in here with his with a little jab in the end. I don't mind the poor fish that gamble. That's fine. As an individual is going in there with a couple of whatever they have and thinking that they're geniuses. I don't like the professionals that take the suckers. That's a lot of what you're seeing right now, especially with these SPACs, especially with a lot of these financial managers and trying to get these little miniature returns. OMG on buying margin. He got that right. Guys, smash the like button for me, and we're going to go into this. And if you just joined, We do not have camera today. I could see myself, but I don't know what. Maybe you can't see me. So, oh well. Unfortunately for you, you won't be able to see my pretty face today. Billionaire investor Warren Buffett said on Saturday that so this is what we have been saying for a very long time, and we just keep talking about interest rates, and the only thing that they're going to keep making this market go higher on interest rates. I mean, if you keep interest rates near zero, the market's just going to keep going. The only way to bring this down is to raise rates, but I don't know how they're going to do it. I don't even know if they know how they're going to do it. But Warren said that Saturday, near zero rates have been completely changed the financial landscape, warning that the consequences of easy monetary policies remain the unanswered question. That's very true. It causes stocks to go up, and businesses to flourish, and it causes the electorate to be happy. That's those in Washington. And we'll see if it causes anything else. I think that statement right there, we'll see if it causes anything else. He knows that it's going to cause something else. But the Fed has said they're going to hold interest rates where they need to be, where they think they need to be at zero. And that's that. So Buffett said the effect of near zero short-term interest rates has created an incredible change in valuation of everything because it has reduced incentive to hold relatively risk-free government debt. Guys, I talk about the yields pretty much every morning with the Treasury bills, the short-term 3-month bills. So right now, he illustrated holding $100 billion in short-term Treasury bills. This is the 3-month note that I always talk about, which would now yield you $20 million from that 2 basis points that it's giving you. Pre-pandemic, when you were able to hold and you were getting those better rates, about 1.5 rates or 1.5% return on your 3-month note, you were getting $1.5 billion a year. So you could see how this is. I mean, is the juice worth the squeeze anymore? With the risk of taking the interest rates to zero. I mean, I could pull up my interest rate thing right here. I have it here. You were literally almost zero, right? I mean, you're almost zero. If this number goes negative, like it did in 2020, that means that you're giving the money that means that you're giving the money. I'm sorry. That means that you are giving money to the government, even though you're already loaning them money. So you're basically telling them, hold my money and I'm going to pay you to hold my money. That's how dangerously close we're getting to zero. So this number, this 20 million number that he says, could easily go to negative 20 million, and your 100 billion becomes less than 100 billion. So, all right. So low rates make stocks look like bargains, and here we are. So let's talk about gold, because I know that a lot of you hold gold. This is from Reuters. Pardon me. Gold prices edged higher on Monday, helping it pull back. So guys, remember, if you guys are in the Bid and Ask Nation or anywhere in the Patreon, to be honest with you, you have seen my sector correlations that I have made, that I have a PDF file for you. When gold prices are up, the US dollar is down. So when the dollar drops, gold prices go up, and vice versa. When gold is down, the US dollar is up. So right now we have the dollar going down, and you know what's remarkable? Let me show you guys. I want to show you guys these charts real quick. Is this it here? Yes. Let's see. So this is the dollar, UUP. Look at the dollar over the last year. It's just been trickling down. I mean, we hit a low. What was this? This was January 6th, hit a low of $24.09. I mean, it's not much higher right now. But just remember this. Remember this picture right here. Now I'm going to type in GLD. This is gold. Gold is doing the exact same thing, which is very strange. Typically, you should be seeing when the dollar's coming down like this, gold should be going up like this. It's not doing that right now. And this is when you start looking and saying, okay, what is going on? There has to be some kind of something going on to make everything be going in the same direction. And this is definitely all of the different, this is definitely all the stimulus money that they're pumping into the markets and giving away and this and that. And it's all manipulation. So guys, when it comes to gold, as long as there's inflation talk, like they're saying right here, Gold is always going to be okay. Look at history. It ain't different this time. I say the same thing. Gold has been the thing that people go to for safety for a very, very long time. Gold is always, it's going to be the safe thing. People aren't going to start going to Bitcoin out of nowhere. When things happen, guys, I say the same thing about when you go to vote at an election. Where's my thingy? When you go to vote in an election, everybody wants to say, okay, I'm going to vote for the third party candidate, this and that. And you're a Republican or you're a Democrat. I really don't care what you are. When it gets down to it, when you go to pull that lever at the voting poll, you're going to say, I'm just going to vote for my candidate on the Republican side or the Democrat side because there's no chance of a third-party person winning. So I look at it the same way with gold. And people say that, oh, maybe it's going to be Bitcoin that's going to come and be the safest thing to go to. Well, when it comes down to it, those people, unless they're really not that intelligent, they're not going to be buying Bitcoin unless they're these minions that are out there that think that Jim Cramer and Dave Portnoy are the greatest investors of our time. So, alrighty. So that's all I got for what I want to talk about. And let's start talking about earnings because, guys, very important earnings week coming up. As always, let's see what we have today. We don't really have that much today. iRobot. Tomorrow, Karyopharm. I know a lot of people are talking about Karyopharm. That is an interesting one. Tomorrow, Pfizer, Activision, Under Armour, Skills. I know a lot of you are in that. CVS, Corsair Gaming, T-Mobile, Zillow. Wednesday, PayPal. So if you guys are in PayPal, I know a lot of those in the Bid and Ask Nation are in PayPal. Guys, smash the like button for me while you are enjoying this show that you can't see my face. PayPal is very important. I know a lot of Bid and Ask Nation is in it. Be careful going in earnings after the bell on Wednesday. Uber, Rocket Mortgage, that's a hype one. That'll probably go crazy. GM, Etsy, Clovis. I know a lot of people are doing Clovis. Somebody came to me last night, I think it was Zach, and he said he wants to trade this Clovis thing on earnings. So go for it if you want to day trade it. AMC is Thursday, Square, Roku. So this is a big week, guys. Very big week. Just be very careful when you're trading, when you're doing different earnings stuff. Last thing, and then we'll start getting into some of your stocks. Bid and Ask Nation, 6 spots left at this price point. Guys, it's the beginning of the month. You get the whole month because the way the Patreon builds. So join it now. You get me for the whole month. Try it out, and we'll go from there. So let's go to your stocks. You guys give me some stocks, and let's do it. Buffett doesn't like gold because it's not a money-making asset. Yeah. I mean, now, let me tell you guys, when I do buy gold, I have a very large position in gold, but I'm holding gold ETFs. I am not holding physical gold. That's just not my thing. I don't want to have a safe in my house filled with gold bars. But I hold gold ETFs, GDX, GDXJ. I do hold one gold company. I don't know if I hold it. I think my father holds it, so that's why I don't disclose it in my portfolio. AU. Let's see what we got here. U.S. dollars going down. Good for us Brits. That's funny. Is Apple still a good buy after their earnings? I mean, Apple. There was a video that came out over the weekend that we did on Apple, and go take a look at it. So it's Apple is just a cash printing business. They are truly incredible. Are they a good investment? You need to judge that for yourself and then make the decision. So you want to look at NEO. Well, NEO's under. It depends what you want to do with NEO. That's really, well, Arthur, Pfizer reports tomorrow, so be careful. NEO it's right in the middle of some moving averages, so you're going to have a very tough time with this thing. I don't know the deal with NEO right now and their EV thing. It seems like all of this EV stuff kind of went along the wayside. It seems like the news story went from coronavirus to election to EVs being the hot thing in the world to cryptocurrency, and now there's like nothing. So EVs just kind of went away. So I'm not really sure what's happening with the EV market. But just keep watching this thing if you want to watch it start moving into the sweet spot, and you Gucci. So let's see. Is gold ETF actual gold or mining companies? It's actual gold. I mean, you can find a gold ETF that is mining companies if you would want. You can find you can find you can find any kind of ETF you want out there. I don't know if it'll be a brand name ETF like a S&P 500 or something like that, but you can certainly go ahead and find it. Pfizer. Let's look at Pfizer because I think I said they're reporting earnings tomorrow. Pfizer. Oh, they've recovered a little bit since their little hiccup going back there. Okay, what's today's date? Is today the 3rd? Yeah. So right here, guys, earnings is tomorrow. Be careful. If you are in this, be careful. I mean, this is a total crapshoot. You can come up here tomorrow or you can come down here tomorrow. Who knows? Nice thing is your major moving averages. If you do gap down here tomorrow, I would assume that you would just gap in this region just because you're going to fall between the 100 and the 200. So be careful with it. Earnings tomorrow. And that's that. Here, isn't it? Here was that, wasn't that Turtle Beach? This is the headphones company from the gamers. Oh, it dropped down it didn't drop down that much. Actually, guys, this is a good teaching moment. You see that when we are, let's pull up the 1 month. You see that when this thing gapped down in price, it gapped down and it kind of held right by that 50-day moving average. And today it popped up right over this 50-day moving average, which is this yellow line. This shows you guys how powerful these moving averages are. We had one the other day. I can't remember. Damn it. I can't remember what it was. Was it Qualcomm? Aha, it was Qualcomm. So you see that Qualcomm jumped up on last week on earnings, and you see it just ran right into its 100-day moving average, and boom, can't break through it. Guys, major moving averages are a very big thing. As soon as right when you start bumping into these bad boys, you're going to have trouble. That's why you need a lot of push to start breaking through these. You need volume, and you don't need this kind of volume. You need green bars. Oh, that's the wrong color, but you need green bars like this that push you up and out like this. And that's what's going to generate this. That's what's going to generate this power to be pushing through major moving averages, especially the 50 and 100 and 200 specifically. Let's see. BJ's we already exited. Excuse me. Yeah, we exited this position because it was just kind of dead. You see, it was just kind of sitting and hovering around this 25-day. The CEO of this company passed away. For those of you that are new, we had bought it right in here. Everything was looking up for us. And then all of a sudden, boom, CEO passed away. And it just killed the trend. This red line actually started to go like, oops, that's black. This red line started to go like this on, okay, what the hell? Go like this on us. And yeah, that's that. So do moving averages matter for day trading? They do not. I mean, you can use them if you want and see like, this thing's going to probably run into the 200-day moving average in 50 cents or so. But I never looked at them. I never looked at them with that much emphasis. Let's see here. So, Michael, I do use moving averages for everything except for day trading. Pinterest. Let's look at Pinterest. I do love Pinterest. I like the app. I don't really know about the company, but this thing gapped down big time. I'm sure you guys want to short it. If you want to short, I mean, you could probably get a nice short going down to this 200-day moving average. If you want to know more about it, take up one of those last 6 spots in the Bid and Ask Nation. Maybe I'll help you with it because this looks like a pretty good short. So if you guys are shorting, if you guys want to short in the Bid and Ask Nation, maybe throw this one in there and tag me in your day trading one or your swing trading chat, and I can go ahead and take a look at this because this thing looks pretty sweet. Let's see, 3. We already did Facebook. I did that last week. I'll do 3M. And then I'm going to get out of here. And, yeah. Let's see here. 3M. So they've had quite the run, I'm assuming, over the past year just because of all this mask stuff. Yep, is this a power stock on us? Yeah, so we have a power stock going. And what a power stock is a stock that's making new all-time highs. And, well, it's not doing it right now. So this would be the all-time high. And it's overall 4 of its major moving averages. It's not anymore. So if this thing can break out up here and get over its previous all-time high, which was just under $204, and over all of its major moving averages, I'm sure this thing can keep going. I wouldn't be too scared about this, but this is a great stock to keep a watch on. So, all right, guys, thanks for bearing with me with everything today. I really love this Warren Buffett talk. I think that you guys should go to Yahoo Finance and just start reading about the different things. Start scrolling a little bit because now it's starting to come out in news. So here's Buffett, and then you can see that everything is just Buffett, Buffett, Buffett going all the way down. I think that there's a lot of good stories in here that you guys should read, especially if you guys are into value investing. And to be honest with you, what I'm going to do today is I'm going to go and look at I'm going to watch him talk, because just listening to the little bit that I was reading about the little pull quotes that he said, I mean, the guy's very interesting to listen to. And so I'm going to go and listen to his entire talk from Saturday, and we'll go from there. So join the Bid and Ask Nation. I will talk to you guys in a few minutes in the Discord chat. Live stream. I'll see you guys tomorrow morning at 9 a.m. Of course, we will see all of you on the big show at 1 p.m. Eastern time tomorrow. I'm sure we're going to talk more about Warren Buffett, get Paul's intake, and we'll have a little conversation about it, and we'll go from there. So you guys have a great day. I will talk to you later. Peace.